Welcome to the Iraqi Dinar Update channel, your trusted source for the latest news, analysis, and insights on the Iraqi dinar. We provide up-to-date information on exchange rates, economic developments, and key financial trends affecting Iraq's currency. Whether you're an investor, trader, or simply keeping an eye on the market, our channel delivers accurate reports, expert opinions, and government policy updates to keep you informed. Stay tuned for real-time updates and in-depth discussions on the future of the Iraqi dinar. The introduction of a digital dinar by Iraq carries significant implications for those holding physical Iraqi dinars outside the country. If access to digital dinar accounts is restricted solely to residents, this would create a substantial limitation for foreign holders of physical IQD. Such a restriction would mean that individuals or entities who have held onto physical Iraqi currency as a speculative investment or as part of a broader portfolio strategy might find themselves in a situation where their options for liquidity are constrained. The ability to exchange or trade their holdings could become significantly more difficult if digital access remains exclusive to residents, potentially forcing many to cash out their physical dinars sooner rather than later. For years, many investors outside Iraq have speculated on the potential appreciation of the Iraqi dinar, with the hope that financial and economic reforms in the country could lead to a revaluation or even a reinstatement of a higher exchange rate. This speculation has often been driven by Iraq's vast oil wealth, its strategic geopolitical position, and its efforts to modernize its financial system. However, if the introduction of a digital currency is coupled with restrictions that prevent non-residents from converting their holdings into digital form, it would introduce a structural challenge that could dampen enthusiasm for holding Iraqi dinars abroad. Without a clear path for non-residents to convert their physical holdings into digital assets, they might face a lack of liquidity or even a devaluation of their investment due to market uncertainty. On the other hand, if Iraq chooses to open access to digital accounts for non-residents, it could revolutionize the way foreign holders engage with the Iraqi financial system. By providing a modernized mechanism through which foreigners could hold and trade IQD digitally, Iraq would be aligning itself with global trends in financial technology and digital currency adoption. This approach would not only create a more efficient and secure means for handling Iraqi dinars internationally, but could also enhance Iraq's financial integration with the global economy. Allowing non-residents to access digital dinars through officially sanctioned channels could also help Iraq expand the legitimacy and reach of its monetary system, attracting more foreign investment and increasing confidence in the dinar. Digital currencies have gained traction worldwide as governments seek to enhance financial inclusion, streamline transactions, and reduce reliance on physical cash. For Iraq, launching a digital dinar presents an opportunity to modernize its financial infrastructure and reduce cash dependency, which has historically been a major challenge in the country's economic landscape. However, the extent to which the digital dinar is accessible to the international community will significantly influence its impact on foreign investors and holders of IQD outside Iraq. If Iraq embraces a restrictive approach, it may inadvertently reduce the appeal of holding dinars outside the country. Investors who have held physical IQD for years in anticipation of a potential revaluation may find themselves with limited options for accessing the benefits of any currency reforms that take place. For Iraq, deciding whether to allow non-residents to hold digital dinars involves weighing multiple economic, political, and regulatory factors. There are potential risks associated with opening up digital currency accounts to foreign entities, such as concerns over money laundering, illicit financial activities, and speculative trading that could destabilize the currency. The Central Bank of Iraq, CBI, and financial policymakers would need to implement stringent oversight measures to ensure that any participation by non-residents aligns with the country's financial stability goals. This could include Know Your Customer, KYC, requirements, anti-money laundering, AML, compliance, and restrictions on large-scale speculative transactions to prevent excessive volatility. One potential model for Iraq to consider is the approach taken by other countries that have introduced digital currencies while maintaining control over foreign access. For example, China's digital yuan, while primarily designed for domestic use, has been tested for cross-border transactions in controlled environments to facilitate trade and investment. Similarly, the European Central Bank has considered mechanisms to allow limited foreign access to a potential digital euro while ensuring that such access does not lead to unintended economic consequences. Iraq could adopt a hybrid model that permits non-residents to hold digital dinars, but within a well-regulated framework that prioritizes financial stability and security. If Iraq chooses to open up digital dinar access to foreigners, it could unlock new opportunities for international trade and investment. Businesses and investors who engage with Iraq's economy would benefit from a digital currency that allows for faster and more transparent transactions, reducing the need for intermediaries and minimizing transaction costs. This could be particularly advantageous for sectors such as oil and gas, where financial transactions often involve international partners. However, if Iraq opts to maintain restrictions on digital dinar access for non-residents, it may lead to unintended consequences for the market. Holders of physical IQD outside Iraq may rush to liquidate their holdings if they perceive a risk of being excluded from the country's evolving financial system. This could create downward pressure on the currency's value in the informal market, potentially undermining confidence in the dinar's long-term prospects. Additionally, restricting digital access could limit Iraq's ability to attract foreign investors. Ultimately, the decision to either restrict or open digital dinar access to foreigners will shape the future of the Iraqi financial system. A well-structured approach that balances regulatory oversight with financial inclusivity could position Iraq as a leader in digital currency innovation within the region. The global financial landscape is rapidly evolving, and Iraq has an opportunity to modernize its monetary system in a way that enhances both domestic economic stability and international investor confidence. By carefully designing a digital currency framework that accommodates both residents and non-residents, Iraq can create a more dynamic and resilient financial ecosystem that supports its long-term economic growth. Thank you for tuning in to the Iraqi Dinar Update channel. We appreciate your support and engagement as we continue to bring you the latest news, analysis, and updates on the Iraqi dinar. Be sure to subscribe and turn on notifications so you never miss an important update. Stay connected with us for real-time insights, expert discussions, and market trends. Until next time, stay informed and keep watching for the latest on the Iraqi dinar. See you in the next update.